Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of July 24th through July 28th, where we'll try to see if we're going to get another Fed interest rate hike and talk about strategies, trade ideas, how we can make money trading around that Fed interest rate hike decision this week. We'll also talk about additional trading strategies with the NASDAQ rebalance, etc. So again, strategies of how to make money trading this week of July 24th through July 28th. So let's get started. Welcome, Easy Mike, Nug M. Thank you both for joining us in the live chat today. Tony Roses, glad to see everyone. Thank you for joining us. So here's our Google document with our notes for part one of our weekly trading game plan for July 24th through July 28th. These Google documents are publicly accessible. You can find a direct link to this Google document with our notes in the description box below. Our Google documents contain links to the tools, resources we use, as well as bonus videos. We keep all of the Google documents with our weekly trading game plan notes in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as previous weeks. And again, you can find a direct link to this publicly accessible Google Drive folder in the description box below. Welcome, Flip of the Shippa, MD, Spacula, good to see you. Hope you're doing well. It's been a long time. Hope you've been doing well. So we'll jump over to the main homepage of FinViz, look at how the markets ended up on Friday. We can see the Dow eked out just a little bit of a gain, and it's on a pretty record winning streak. I think it was 10 days in a row, and that's not quite the all-time record, but a pretty good record for positive on the Dow. The NASDAQ dropped off a little bit, and the S&P eked out a small gain. We see in the heat map, the mega cap techs in general kind of had a sell-off, and we'll talk about the impact of the NASDAQ rebalancing that occurred essentially at close on Friday and going into Monday. And the impact of that. Thank you very much for that super chat, Spacula. Spacula has been a long-time supporter of our BeachBum trading community. Thank you very much for that. It's very much appreciated, and we appreciate your long-time support, Spacula. If there's anything that we can do to help you succeed in your trading career, please let us know, or any questions we can answer for you. Again, we greatly appreciate that super chat. So we see advancers to decliners is pretty split, about 50-50. On Friday, we did get more new highs, almost 80-20 new highs versus lows. We've again got 75% above the 50-day moving average, 25% below. And you can see now we've got a 60-40 split, bullish split above the 200-day moving average as well. And even though it looked like a late day swoon, we came off with a slightly bullish sentiment. Welcome, Alan Krantz. Thank you for joining us as well. If I had an extra million, I'd lend you some. So we look at some of the quick news. Netflix earnings cast clouds over the tech surge. India rejects $1 billion BYD factory. Are we going to have a recession? Maybe next year. Regional bank crisis over. Dow higher, 10th gain in a row. We'll see oil is now up above 75. So oil's been moving up, now running between the 75-80 area. We'll see that in the futures as well. Natural gas continues to work its way up, now between 250 and 3. Gold's got some support at 1950, now oscillating, towards 2000. So we've got support at 1950, resistance at 2000. And we can see the futures now are pointing down a little bit. We saw the dollar kind of oscillate a little bit. It strengthened later on Friday. We'll see the weakness in the Japanese yen probably contributed to the strength in the DXY. And we see these treasuries are now below 4%. Again, we'll talk about the impact of the Fed interest rate decision, possible hike on the treasury rates as well. So now we'll look at each of the indices, groups, sectors, etc. Talking about the AMC move after the judge declared they weren't able to do their ape conversion. So again, meme craziness in AMC. Again, we don't generally play with those. My opinion would be to be careful. Protect your profits. Don't get caught. So we'll look at the SPY. We see the SPY had a run up. It's broken out of the channel. Again, we're going to see, general exuberance except for the, the last couple ticks. We can see it rolled over a little bit, so it's floating above that support level of that channel. So again, we'll be very likely to see a retest of that support. Again, we'll talk about the effect of the NASDAQ rebalancing also on the S&P. So again, very bullish trend, running still, significantly above its longer-term moving averages. So again, we might see, again, with this NASDAQ rebalancing, we might see a little bit of a correction in both the NASDAQ and S&P. We'll look at the NASDAQ next. And we see that the weekly candle had ended up below the previous week. So again, I think that's the impact of the rebalancing coming up. But the trend, very bullish trend, again, running well above its moving averages, broke above the previous high, going, towards testing the next high in the low 400s. Look at the Dow. We'll see that run that the Dow's had. So again, nice, it was pretty flat, pretty consolidating, popped up this week, had, that 10-day winning streak. So probably see some correction in that. Again, after the impact of the rebalancing, I think we're going to see a sector rotation, out of the Dow. It's broken above the previous high. And again, I think that was a lot of it was sector rotation out of the mega cap techs from the NASDAQ rebalancing, looking for somewhere to put that money. So a lot of it, I think, rotated into the Dow since the Dow had been underperforming. Probably also see this in the Russell as well. So we see a very similar behavior in the Russell, although it has yet to test its previous high. Again, I think that's some of that was sector rotation, money coming out of the mega cap tech stocks and looking for a place to go. So I think part of it went into the industrials, part of it went into the Russell. Look at the VIX very quickly. See, the VIX is still pretty depressed. I think I saw it under 14 still. We might see a little bit of volatility around the Fed interest rate decision, around the NASDAQ rebalancing. But again, the VIX has been very depressed. Probably a combination of the summer doldrums and the zero DTE effect. We also had the July options expiration was Friday, but we really didn't get a whole lot of volatility out of that. Look at the groups and sectors. Alan Krantz says, I think everyone got burned out of the AI hype. That very well may be the case, although I think we'll look at who's announcing earnings. We've got some big earnings this week as well, mega cap techs, and we'll hear how much they try to pump up on the AI theme again. So we might get some further AI hype coming out of those earnings calls. We'll have to keep an ear out for that and see what impact that has. So The main sectors, there's a little bit of a flight to safety on Friday. Again, I think rotation out of the mega cap tech. So we see technology, communication services, slightly negative, rotation into utilities. Again, very defensive, safe. Saw a rotation back into energy. Again, oil's pumping up over 75, natural gas up in the 270s. So for the week, a little bit defensive, energy, financials, utilities, healthcare, defensives, and again, that rotation out of technology and communication services. Real estate was pretty flat. Basic materials just slightly positive. So very similar for the month. That seems to be the theme. And we saw technology for the quarter was very strong. So again, that sector rotation's not terribly surprising. It'll probably continue at least for a couple days, and then we might see a reversal back into technology. We'll see. Good morning, Walter Lyons, Mods 113. Thank you both for joining us. Glad to see you here as well. So industries, see oil, utilities, etc. We saw a sector rotation, a bounce back in aluminum. Some of the REITs bounced back. A lot of oil, natural gas. Saw a sector rotation back into steel. We'll talk about an opportunity potentially in that sector, playing that sector rotation tomorrow. See the weakest, some transport, copper, autos, uranium, again, kind of an oscillation. Uranium's been a little up, a little down, not a strong trend lately. Coke and coal was positive for the week. Another sector rotation, energies, farm products. See gold for the week was slightly negative. Again, gold and silver have been rotating in and out. The longer term trend's been up. See some negativity in some of the REITs. Again, they've been oscillating, had a couple good days, and then a correction, and then a bounce back. Again, silver pretty positive for the month. We had a little bit of a retracement recently. Steel positive for the month. Gold. And there's the negative in aluminum. So we saw that rotation back into aluminum very recently. So again, opportunities in playing these sector rotations, and we'll look at some of those again. Individual stocks, ETFs. We'll look at some ETFs in the near future, and then we'll look at some individual stocks to play these sector rotations probably more tomorrow. Okay, so let me grab a drink and I'll bring up the economic data calendar at investing.com. We'll review some of the economic data that we got this past week, and then talk about the economic data. The main thing will be the Fed interest rate decision. I think the markets will be somewhat subdued, waiting for that interest rate decision on Wednesday. We'll see that in a minute. Alan Krantz is asking about government fiscal year. And yes, October is when the well, not necessarily government contractors, but the federal government, their fiscal year ends in October. And yeah, they'll have a new budget. We'll have to see, what funding changes are made in the new budget. They sold oil now, they have to buy it back, or lose funding. Yeah, we'll have to have to watch that. They were saying they were going to buy it back, around 70. I don't think that they got those buys in. So now, yeah, we'll have to see, are they going to buy it back more expensively, or are they going to put it off till the next fiscal year? But I think there's going to be pressure to refill the SPR, the Strategic Petroleum Reserves, that they depleted, possibly even if it's more costly. So what do you all think in the chat? Or do you have any additional information about the refilling the SPR and the government funding? So the economic data from last week, not much on Monday. Tuesday, we got retail sales data. The June data was, again, a little bit weak. Again, we had hypothesized that would be the case, that June retail data would be a little bit weak, and that we probably will see a bounce back in July due to Prime Day. In terms of sales volume, dollar sales, I think we'll again see a bounce back in July. It was a little weak in June. Market didn't really react negatively to that. Not much Wednesday. We'll see in the investing.com calendar if there was anything I missed. But Thursday we got jobless claims. The continuing was a little bit higher than expected, but initial was significantly less than expected. So again, data showing the job market continues to be resilient, allowing the Fed to be more hawkish, more aggressive with Fed interest rate hikes without fear of the unemployment spiking. And again, it looks like, there's fewer people losing jobs, fewer layoffs, and but the people that are out of work it looks like they're having a little bit harder time now finding new positions. So that might be, again, a skills mismatch, and we might continuing to see that. Manufacturing was negative. Again, recessionary, concerns, but slight. Employment better than expected for July. New orders were poor. So again, manufacturing, the front end of the economic curve, kind of slowing down. We might end up with a shallow recession or just a slowing growth. And then the news, U.S. labor market's going strong as first-time jobless claims dropped to 2-month low. So again, employment picture's pretty positive, and again, the Fed can be quite hawkish with that going into this interest rate decision. So Alan Krantz confirmed that they have started to add to reserves. So again, we'll just have to see how much they're able to do, or if oil's going to stay high, if they're going to have to wait for oil to come back down. So next week, the main event, as we'll see, is on Wednesday. The Fed starts their meetings on Tuesday, but we come out with the statement and then the interest rate decision on Wednesday at 2:00. So they'll release the statement. We'll know what the interest rate going forward is. You can see we'll look at the CME FedWatch tool and the Fed rate monitoring tools to see what the probabilities are of a 25, etc., or zero interest rate hike. And then we'll talk about strategies around that. Then we've got Powell come out at 2:30 and have his press conference, and I think that will probably be very significant as to what does the outlook look like going forward. So we've seen inflation slowly coming down, but very slowly. Job market's still pretty strong. Housing's still pretty strong. So if he comes out hawkishly, we'll see when we might see additional rate hikes going forward. Then Thursday, we get jobless claims, GDP, and PCE data for Q2. And Friday, we get PCE data for June and Michigan sentiment. But again, I think the Fed rate decision and some earnings reports and the NASDAQ rebalancing will be the major events for this week. So again, we saw the manufacturing data was a little bit better than expected. New York Empire saw retail sales. Production was a little negative. Again, we're seeing negativity in manufacturing and industrial. activity. So, it bodes for slowing of the economy going forward. Crude oil inventories were just down slightly, less than expected. So again, we're not seeing a big draw on inventories. Mortgage rates dropped a little bit, so that'll give a little bit of a boost to the housing market short term until those rates bounce back up. Building permits was less than expected. Housing starts less than expected. So again, I think that's a lot of that is the bouncing of the mortgage rates. So we got job data. We talked about that. Existing home sales less than expected. Again, people don't want to sell their existing homes. Natural gas storage was up slightly more than expected. So again, building, but the price is still going up. And Baker Hughes oil rigs, again, oil rigs coming offline. So that's contributing in part to holding up the oil price as well. So if we look at the economic calendar again for next week, activity, global services PMI, housing, Richmond manufacturing. Again, the main thing will be Wednesday, again, when we get the Fed interest rate decision. So you see now they're forecasting a 25 basis point increase. And again, we'll look at the probability tools to determine additional forecasts for that rate hike. And I will preface that with my personal opinion. Again, I put the banner up that none of our content should be considered financial advice. We're not financial advisors. This is all for education and entertainment purposes only. And this is all my opinion. So again, we see GDP. GDP is expected to slow, but still be positive. So no indication yet of a recession there. Jobless claims, initial expected to go up a little bit. Continuing expected to go up a little bit. Get core PCE. So again, some decrease in inflation. Personal income stable. Spending up. So again, slightly inflationary. Sentiments expected. Inflation sentiments expected to go up a little bit. Overall sentiment expected to be positive. The last reading was positive. So again, everything, looks like it's balancing out, kind of, slowing, reaching a stable state. And I think, the markets are more focused on the interest rates. And again, earnings matter again. We'll look at the earnings calendar here in investing.com. Again, you could just hit the tab here, and I'll show you also in Webull where there's a near term. But earnings are going to be very important. Got some large cap techs. There's Domino's. We've got some food. This is all Monday. A lot of earnings. We're in the heart of earnings season. Cleveland Cliffs, some miners, steel. Some financials. Still got some banks. Quite a few of the banks have already reported. So now we've got some regional banks. We'll hear if there's any risk of any additional regional banks is needing to be bailed out or consolidated. Welcome back, Easy Mike. Thank you for joining us. Hope you're doing well. So again, we've got tons of earnings. And then Tuesday, we've got Microsoft and Google, again, mega cap techs, semiconductors, Texas Instruments. So again, Tuesday, I think, is going to be the earnings day. We'll hear again comments about AI. Are they actually making money from AI? Is it a cost at this point? Got 3M, General Motors. So again, we'll hear about EVs, autos, etc. Nucor, more steel, Dow. Okay, so huge earnings coming out starting on Tuesday, heavy earnings. So I would definitely recommend that you pay attention to who's reporting earnings, what sector, how does that impact your current portfolio, potential buys, etc. So again, and then see what kind of reactions we get to those earnings. If they miss, I think they're going to get punished significantly. If they beat, they might get rewarded if they can beat expectations. Otherwise, might not be much of an effect. So again, earnings matter, and I would definitely recommend you review the upcoming earnings in more detail and how that will affect your trading and portfolio. And then we get Meta, Coke, etc. So again, Boeing, huge earnings week, and I think that's going to cause significant volatility around those individual stocks and sectors. So again, the Fed decisions on Wednesday the 26th, then we've got a skip for August, and then they'll have their Jackson Hole meetings in August, and we'll listen to what they have to say coming out of that in terms of, going forward. And then the next meetings are September, end of October, and December. So we'll be thinking they've broadcast they're going to have two hikes. That's what we've heard so far. That's what I expect going forward. And we'll see what they say, particularly what does Powell say in terms of when might we expect the second hike. And we'll also look at the probability tools and see when currently the markets is expecting a possible second hike. Okay, let me jump over to Webull. We grab a drink. We'll look at the markets screen in Webull. Just a quick reminder, if you're not already using Webull, they're still offering 12 free fractional stocks to open an account, and they're still offering a 5% interest rate on cash, your idle cash in your cash account. So again, we use Webull for market analysis, due diligence, and the majority of our trading. And you can get your 12 free stocks and your 5% interest using our affiliate link in the description box below. And again, we appreciate the support. If you are not already using Webull, if you open an account using our affiliate link, that will also help support our channel as well. Welcome, Danielle D. Thank you for joining us. So this is the market screen on the online browser version of Webull. You could see advancers versus decliners was pretty split, almost 50-50. And then we had quite a few that were not unchanged. So small percent gain loss, just kind of oscillating in there. Net inflow, again, we see NYSE versus NASDAQ. So outflow out of NASDAQ, again, and inflow into NYSE. We've seen that now for a couple weeks. And again, I think a part of this is due to the rebalancing of the NASDAQ, which on close, they're, reducing the percentage of the top and what they're calling the Magnificent Seven. The top mega cap techs are reducing their percentage in the NASDAQ, and any funds, indexes, etc., had to then sell those and buy where they're allocating those percentages to. And so we saw a part of that occur. I think that started already. I think it was Wednesday. Tomorrow we'll look at, we'll look at the technology components. I think It started already, I think, on Wednesday and then proceeded Thursday and into the close on Friday. And I think we'll continue to see some of that in Monday and then possible recovery going forward. So again, you can see a near-term earnings calendar in Webull. So this is very helpful to see who's coming up in the very near term. And if it's a before market open, after market close. So again, you can keep an eye on the upcoming earnings reports in the market screen in Webull as well. A little bit shorter list to manage. So let's look at all the industries for the week. So for the week, we see investment banking did pretty well. Charles Schwab was positive. Again, there was some initial concern about the banking segment within Schwab that looks like they overcame, so that was positive. Biotech, pretty split. Education, a little positive. Uranium, slightly positive, a little split. Insurance recovered. Food and drugs, positive. Natural gas we saw is up. Utilities, we saw the rotation into utilities. Healthcare, pretty split. Again, energy, oil and gas, positive. Again, utilities, positive. So again, we saw that, flight to safety, defensive nature, some part of pharmaceuticals, a little positive. Yeah, Easy Mike's been pointing out private equity and investment banking, and that was showed slightly positive. Okay, ETFs. We'll look at the market ETFs. So now a short on the Dow. Again, Dow's had a pretty significant run, so we've got a couple shorts on the Dow now. Small cap bear, so short the Russell. Again, we saw the rotation into the Russell. Now we're seeing, pointing out of the Russell, out of small cap. Short the VIX. So again, right now, they're still not betting on any increase in volatility right now. Small cap bear, again, small caps, short the Russell, short the Dow, small caps, short, mid cap, short. So again, rotation out of small mid cap, short the NASDAQ, which again, with the rotation or with the rebalance, again, we expect, some sell-off in those mega cap techs. So short the NASDAQ's not surprising, particularly the FANGs. And tomorrow we'll talk about FANG-U, FANG-D, the impact on the FANGs. We'll look at that in the technology component screener in a few minutes. So up on Europe, up on China. So you've got a split up and down on China. So pretty mixed. And you've got less down on Europe, a little bit stronger up on the Europe. Welcome, Carmen. Thank you for joining us. Glad to see you. So in terms of industries, again, healthcare positive, energy, utilities, technology pretty split, basic materials a little negative, cyclical pretty split, defensive a little positive, real estate positive, financial services slightly negative, commodities, energy, oil, pretty much oil. Asia positive, private credit. Easy Mike was just talking about private credit. So there's a ETF to play private credit positive, 7 to 10, 3 to 7 positive. Swiss franc, British pound, won, all positive, euro and Canadian dollar negative. So we'll bring up our ETF Google sheet, take a quick, actually, let me look at the futures first, and then we'll see if there's any categories in the futures that we want to focus on in our ETFs. So here's the futures screen. I'll flip that over to the dark theme now. You all can let me know if you like the light theme or the dark theme better in FinBiz. So far, the input's been dark. So we see that run in the Dow. Looks like, topping action in the Dow. Might see a rollover. We see that rollover in the S&P. More significant rollover in the NASDAQ. Again, rollover in the Russell. They've had, significant runs. Nikkei's been flat lately. It hasn't retested the previous highs. Euro stock's been, oscillating quite dramatically. That definitely looks like a harmonic oscillator. We'll see if it tests its high again. If so, we've talked about ways to use ETFs to long and short the Euro stocks, also the DAX. So we see that dramatic bounce in the DAX. Again, we see, the VIX futures got, they move forward, the contracts move forward, but we're not seeing any significant pop. Again, we see support in crude oil, WTI around 75, so kind of oscillate between 75 and 80 right now. Again, natural gas got support around 250, previous high not quite at 3, so now it'll have to, see if it can retest that 3 area. Gold, again, support at around 1950. The next resistance around 2000. Silver's got support at 24. It's been oscillating around 25. So we'll see if that can regain support at 25 and continue up towards 26. Platinum and palladium had a little bit of a run, rolled over a bit. Corn and wheat. The Russians are taking various actions to curtail wheat coming out of Ukraine. The deal, they kind of canceled their deal that they had, and now it's kind of up in the air whether they're going to reinstate that deal. They've also been targeting shipping of wheat out of Ukraine. So even despite all that, we see wheat kind of popped up and then rolled over. I don't know if any of you are still long wheat. I know several people were. We got bounced out of our wheat position a while ago. See a big rollover in lumber. Unfortunately, I don't have a ETF to short lumber. Was looking for one. And we see the bonds, peaked out, rolled over. We'll see if we get another upswing in bonds after the Fed interest rate decision. See that, dramatic decline in the dollar. Looks like it got bottom just below 100, and then it bounced up slightly, again, in part due to weakness in the Japanese yen. So again, we'll see if that uptrend in the dollar continues or if it rolls back over and breaks down below 100 again, which obviously is good for all your dollar-denominated commodities. So Walter says he's got some wheat. Mod said he was bounced out of wheat too. Yeah. Congratulations, Walter. Okay, now we'll bring up our ETF spreadsheet. So if anyone else has any categories, indices, commodities, etc., that you'd like to look at ETFs in specific to long or short, we'll look at that in our ETF Google sheet and see if we see any other opportunities there. Just a quick reminder, if you'd like access to the ETF Google Sheet to identify opportunities to long or short various indices, commodities, etc., you can get access to that via our all access or VIP Patreon levels. And then you can use this again to identify, as we identified opportunities in like the futures. If you're looking for an ETF to play those long or short, you can use our Google Sheet to do that by joining our Patreon at either the all access or VIP levels. Also got a number of videos on various sectors, financial sector, gold and silver, real estate, etc. So you can hear our discussions of those via these videos. And also I want to start out, Walter Lyons mentioned an ETF for Mexico last week, so I want to take a look at that first. And then we'll again come back and look at other categories. So Walter mentioned EWW as a ETF to play Mexico. And we'll take a look at that one. And what I did then is I went to the ETF database and searched in FinViz to see if there were any other ETFs to long or short Mexico. So we'll look at the results of the risk reward profiles for these three ETFs. They're all longs on Mexico. So we can compare the risk reward profiles of those three in the ETF sheet in our ETF Google sheet. So if I flip over there to the ETF database, again, you can just copy paste from the ETF database into this sheet, and then I can do the research on the risk reward profiles. So I'll zoom this down a little bit. So we see we've got three ETFs to long. This MEXX is a 3X bull, so it's a leveraged ETF. And if we look at the risk reward profiles of each of these, we can see near term, there's not a whole lot of reward. If we go out to the 52 week, maybe 1.5, but that 3X MEXX offers a 2.87. They are optionable except for this FLMX. So both EWW and MEXX are optionable. And you can see bottom to top that MEXX has a pretty nice risk reward profile. You can see right now, they're pretty high. Got support at 140 for MEXX. EWW's got support at 55, top at 64. So again, they're relatively high. And that's what Walter was pointing out, that Mexico's had a pretty good run. Again, I couldn't find ETF to short Mexico. But again, if you're in an account where you can short individual shares, or you could buy puts on those two that are optionable, the EWW or MEXX, or again, if you're in the type of account where you can short individual stocks, those would be opportunities to potentially short. We like this leveraged ETF. Again, it's offering a significantly better risk reward from a 52-week bottom to top range. So we're adding that to the main ETF spreadsheet. So I've added MEXX to the ETF sheet. I did not add it to our database yet. So again, I'll manually have to maintain the support and resistance at this time, but this will give us a way to keep an eye on the Mexico markets, as well as you can see, Brazil, and we've recently talked about Brazil and Europe, etc., and the Nikkei. So we're getting a more of a global mix and starting to look more at some of the opportunities in more global markets, as I think we might get some outperformance in some of the global markets going forward. And we'll talk about, we've looked at and talked about ways to long short Japan. And again, we'll probably look at that again briefly tomorrow. So let me know again in the chat if anyone has a particular category you want to look at. Otherwise, I'll spin through a few. Actually, even before I do that, EWW will be on my watch list. So cool. And again, you might want to consider MEXX Flippa. As again, I think again, it's a leveraged ETF, so you're going to suffer some of the decay, etc. There's higher risk in the 3X, but I think the risk reward profile at MEXX is a little uh, bit better than just EWW. But again, that's your prerogative. I want to look at the technology components real quickly, and we can highlight some of those also in our ETFs. And we'll look at individual strategies, individual ETFs on our watch list more tomorrow. But I wanted to show this, Fang Yu. We see the dramatic reversal. It tested, got rejected off that upper trend line. That's what we were looking for. Tomorrow I'll talk in more detail. I missed that reversal. It occurred on Wednesday about 12:30 or so, and unfortunately I missed that, but that's kind of the behavior we were looking for. We'll see if we get another test of that upper trend line. I think possibly with the rebalancing, the NASDAQ rebalancing, once they do the sell-off of the mega cap tech fangs, we might see, buy the dips on early to mid next week. I don't know if we'll get a retest of that upper trend line again, but if we get that reversal on a buy the dip and the fangs, that might be an opportunity. Or, you could play the bounce using Fang U. So the short of Fang U is Fang D. Same thing with SOXL, which is semiconductors, about the same time. Again, NVIDIA is going to lose some of its weighting. I heard part of it's going to Broadcom, ABGO. So again, about the same time, Wednesday, noonish, we saw that dramatic reversal right off that upper trend line. So again, these upper trend lines seem to be a pretty good measure, and I'm trying to use those to determine when to play these reversals. So SOXS is the short on semiconductors. Again, NASDAQ kind of overshot its upper trend line, but then reversed, and biotech is just kind of oscillating. Congratulations. Easy Mike said he made a ton off NVDS, which is an individual short on NVIDIA. We do have that in our Google Sheet, so you can track those. So again, you can access this screener on the Screeners tab in our Google Sheet. And again, I'm using that to find those resistance points or support points on those various technology components. We'll also talk tomorrow. We're looking at possibly, shorting ARK-K. The short on ARK-K is SARK. You can see biotech. You can long and short with LabU, LabD are the leveraged ETFs. We'll talk about MJ tomorrow. We've been watching MJ. If you want to day trade, short-term trade China, we tend to use yen long, yang short. It's been kind of oscillating, not a whole lot of trending lately, but again, day trade, short-term scalping, you can get some volatility in China with yen and yang. Corn, you see it's kind of high. We're long BDRY, which is dry bulk shipping. It's continued to decline. We've talked about Europe, EURL long, EPV short. So again, if Europe stocks test that high again, then we'd be looking to short with EPV, Fang U and Fang D. Plenty of ways to play gold. Easy Mike's been talking about India, Vietnam, again, some other global markets, kind of high right now. The short on the Qs is SQQQ. We saw that had some interest, again, with the rebalancing, natural gas. So again, you can find all of these in our ETF spreadsheet. Here's the long and shorts on the Russell and the S&P. I think there's more risk in trying to short the S&P than shorting the Nasdaq. I think the rebalance is kind of the theme that we're focusing on. Similarly with semiconductors, I think there's opportunity there, but less so because I don't know how that rebalance. We're going to get a sell-off in NVIDIA, a rotation into Broadcom, and possibly some others. But it might not have as dramatic as an effect as it does on the FANGs. So again, I hope that all helps. If anybody else wants to look at any particular ones, you can let me know. And again, you can get access to this Google Sheet and find various ETFs for a commodity category index by joining the all access or VIP levels of our Patreon. Okay, so I want to quickly get to the Fed rate monitoring tool and the CME Fed Watch tool, talk about our strategy of are we going to have another Fed interest rate hike. So again, you can find the links to these tools both in our notes, also on our homepage in the links section. Our homepage is beachbumtrading.com, bum without the U. I'll put that up in the banner as well. And under reference links, you can find both of these Fed rate monitoring tools and the CME Fed Watch tool. So we can see right now the probability is there's a 99% chance of a 25 basis point interest rate hike in July. So kind of what I expected, what I've been saying. I expected a 25 basis point hike in July. That's what the Fed rate monitoring tool is showing us. So again, everyone is expecting a 25 basis point hike in July. No hike in September. And a 30% chance of a hike again in November. So again, right now, the market and the expectation is for a 25 basis point hike this week, nothing in September, small percentage, 15% chance in September, most probable or more probable in November. And then again, that looks like almost a cut. So the market right now is still pricing in a cut in December. In my humble opinion, again, not financial advice, but I don't think we're going to get any cuts this year. They've been saying we're going to get higher for longer. And again, that's my personal opinion, my expectation. Again, I've got videos on how to use the Fed rate monitoring tool, as well as how to use the CME Fed Watch tool. So you can get more information about how to use these tools via those videos. So here's the CME Fed Watch tool. So again, 99% chance we're going to get a 25 basis point hike in this week on the 26th for July. September, again, very, very small percent chance. Those are all 24. So let's go September 23. So again, small percent chance of a hike in September. Not much in November. And then again, flat to a cut in December. So those two tools are in pretty much agreement whether we're going to get a hike this week on the 26th of 25 basis points, nothing in September, possible additional hike in November, and then again, the market's kind of pricing in a cut in December, and I don't think that's my opinion. I don't think that's going to happen. So again, we'll be listening to what Powell actually has to say. And does he broadcast, when do we expect the next interest rate hike? And, are they reaffirming there's not going to be any cut this year? So in addition to trading and our strategies for making money trading around another Fed interest rate hike, we also have a number of videos on how to make money trading this summer, in June, in July, etc., and typical best performing sectors in the summer and in July. So you can access those via the links in our notes. And we looked at the technology components tomorrow, in addition to selecting our individual top swing trading stocks to watch. We'll also review our dividend-paying stocks and ETFs, strategies for making money, additional strategies for making money trading using dividend payers, as well as our option strategies. We'll talk about that tomorrow. So if anybody has any last-minute questions, you can throw them up in the chat. Walter says, looking at O again. Yeah, we'll look at that in our dividend payers. I was looking at a number of real estate, and we'll talk about some of our real estates tomorrow. We can remind me, Easy Mike, we can look at potash again tomorrow. And if anyone has any other individual stocks, topics that you want to cover tomorrow in part 2, please let me know. You can tag us in our Discord. You can find a link to our Discord in the description box below. Our Discord's free to join. Got a great group of traders helping each other out in our Discord. And again, it's free to join. You can find a link in the description box below. Tag us, ask us questions there. For BeachBum Trading, we're the only one. There's another imposter. If somebody has a number or pound, they're an imposter. That's us, BeachBum Trading, all lowercase. And again, you can find links to all of our social media on the link section on our homepage. So if you have any questions, additional stocks you want us to look at tomorrow, please ping us via one of our social media sites, and we'll do what we can to take a look at those tomorrow. So I appreciate everyone that joined us in the chat and everyone that's watching after the fact. Again, tomorrow, this is part 1 of our weekly trading game plan for the trading week of July 24th through July 28th. And I hope you'll come back tomorrow, same bat time, same bat channel, 10 a.m. Eastern time, and we'll have part 2 of our weekly trading game plan. We'll select our individual stocks and ETFs for our top swing trading stocks to watch for the week of July 24th through July 28th. And again, we'll talk about additional strategies, option strategies, dividend payers, additional ways to make money trading around another Fed interest rate hike and going forward. So thank you again all for joining today. I hope to see you all tomorrow, and have a great rest of your Saturday. Bye.